Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode is Investors Dazed and Confused.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today we'll be talking about investors being dazed and confused. Why are investors dazed and confused? Well, it's quite interesting. I just spoke to a group of business owners this morning, and we did a question and answer session, and there were a lot of questions about what's going on in the marketplace, what's going on with public policy, and in particular, what's going on with tariffs and how is that going to affect us. You know, it's very interesting anytime you have something like what's going on right now. Now, we've been talking about tariffs being implemented since President Trump got elected to office. So we knew tariffs were coming, but nobody really knew how the tariff strategy was going to be rolled out. But it's pretty interesting. I think if you go back and you look at President McKinley's presidency, his vision for how to utilize tariffs to raise revenue, but also how to balance the playing field between countries and open up markets was incredible. In fact, had he not been assassinated, I think that you would have seen he was elected to a second term. It was in his second term when he was assassinated. Had he not been assassinated, I think you would have seen probably 8 of the strongest years for the U.S. economy. Teddy Roosevelt, who preceded him as our president, really didn't understand, I think, McKinley's vision for tariffs, even though he did win 2 terms and is an iconic president in U.S. history with his bully pulpit and his very strong persona. As the vice president under McKinley, I don't think he really fully grasped how tariffs can be used in order to strengthen a company or a country's financial standing and balance trade throughout the U.S. You know, there's no doubt. I mean, when you look at the trade imbalance, that the United States has had the short end of the stick for probably the last 4 or 5 decades. It has been pretty brutal, the trade agreements that we currently have. Now, they tried to fix it with NAFTA and with the free trade agreement between Mexico and Canada and balance out some of those. But even so, there's been a lot of hindrances in it, and certainly with China, where China has gotten they've tried to get them favored nation status. They've got them into the world economy. And what's really interesting, if you go back and look at it, now it's been several months since I've looked at this thing, but if you look at the charts of economic powers in the world, 30 years ago, China was way down the list. But if you look at the list now, China is way towards the top. And one of the reasons is because of the imbalance in trade. Between slave labor, very low pay, and manipulated markets in China, they're able to build stuff very cheap and flood our marketplaces. And what that does is it takes manufacturing out of the U.S. and puts it offshore, and then we end up buying more than what we are exporting. And President Trump is saying enough is enough. And I think really where President Trump wants to get to is he wants to get to where there's no tariffs. I think what his intention is to utilize tariffs in the short term to be income generators, and then go to a level playing field and try to negotiate either low tariffs between each of the countries or zero tariffs where U.S. goods can be sold into all of the different countries' marketplaces, and then have, obviously, other countries compete with the U.S. products here on a more level playing field. So what's this done? This has caused a lot of turmoil. It's affected the stock market. And I think a lot of investors right now, even real estate investors are going, well, wait a minute, is this going to take us into a recession? We've been living through the potential of a recession for 2 years prior to President Trump coming into office. In fact, if you look at most of the indicators, that they would show that we were recessionary. They would always find one indicator that said, "Oh, we're not officially in a recession because this hasn't happened or that hasn't happened." But really, the economy over the last 2 years with Bidenomics was in tatters. Particularly, our area, for real estate investors, it was really shook up. So what President Trump has done is he's come in and he said, what you guys have done for 40 to 50 years hasn't worked. We're going to blow it up and we're going to do something totally different. And one of the things that the stock market hates is change. Stock market hates change. Anytime that there's change or uncertainty because of the change, because they don't understand what's really happening or going on, stocks will tend to reset and begin to lower on their P&E numbers, which is their profit versus earnings number. Let's take, for instance, Home Depot, Lowe's, whatever. The two big, I would say, nationwide hardware retailers. If their stock was good before the turmoil hit, their stock is going to be good after. I mean, you can just go back and look. Historically, stocks are going to rise. It's at what point? And so uncertainty is bringing some volatility into the stock market, and we saw right away, some real turmoil, sometime a little bit ago. But then we started to see some of the companies starting to come back. So it went all red for a few days, and then it's been on a constant point of going green, which means stock market is starting to get a little bit more comfortable and confident. There's going to be some more turmoil because there's going to be some country, and we saw it early on with China, that's going to push back, and then the U.S. is going to push back, and it's going to shock the markets again because they don't know what's really going on, and it's going to bring some turmoil. But I want you to look at some core indicators, things that affect just the common person on the ground, and that was egg prices. When President Trump took office, I remember the opposing party for 2 weeks solid were yelling about egg prices, that Trump was going to deal with the price of goods day one, and they complained about how he wasn't doing anything in his first 2 weeks. But since then, egg prices have come down dramatically. Now, the other thing, let's talk about another thing that affects everyday living, and that's gasoline prices. Gasoline prices were bouncing somewhere in the $74 to $78 a barrel. And when I checked yesterday, oil prices were at $58. Now, that's going to bounce a little bit. But as they start to open up the oil reserves and energy, it's going to start bringing lower prices at the pump, and it's going to ease some of the pressures on the consumer. Now, before all this tariff stuff hit, we started to see the bond market start to drop. And why is this important? Now, this all relates to real estate investing. Just stick with me here. But we started to see the bond markets start to drop. The reason that's important is because mortgage interest rates are tied to bond markets. Stocks and bonds don't always move concurrently. In fact, as the stocks were dropping, bonds started to go up again. And so that'll probably bring interest rates back up for a short period of time, but they're going to be back down. One of the other things we've noticed is inflation was continuing in the fourth quarter under Bidenomics to continue to rise all the way through the end of March. What we started to see is inflation come back down into the mid-twos. And so we're starting to see the inflationary numbers come down, consumable food items starting to come down. We're seeing oil prices, which means gas at the pump is going to begin to come down. LNG will begin to come down. Trump has just worked on a new clean coal deal, so we're going to be bringing more energy online in the coal sector as he's trying to find resources and energy to support the AI emergence. And then something else that even though these tariffs are putting pressure and causing confusion with many people and causing some stock market issues, is that President Trump's got $4 trillion in commitments from other countries, from businesses in other countries, to bring money into the United States to start manufacturing into the United States. So what does that mean? That means there's going to be more jobs, there's going to be higher pay. Over the next 4 to 10 years, you're going to see some real growth. So that means that I think the future is bright. No matter where we're at, I don't think we're going to hit a true recession. I don't think we're going to hit true stagflation. I think what we're going to actually start to see is lower interest rates. So what does that do for us now? That creates some opportunities. First off, if you're not retiring tomorrow, really the price of the value of your 401k doesn't really matter today. The effect on your CD doesn't matter today. The effect on your mutual fund doesn't matter today because those are all long-term investments. If you're retiring tomorrow and you need to start taking money out of it, yeah, your 401k may have had a little bit of a bump in the road, but history tells us it's going to come back. We are going to get there, and there's so many other indicators in the marketplace that show that the economy is going to start spurring off, profits and jobs and returns. It's not unlike what we saw in 2017, 18, and 19. I think that we're headed that direction. So I just tell people, and I told this group of business people that, let's take a look at it. You don't have to sell today. Don't sell. This may be a good opportunity to buy. There's a lot of stocks right now that are on sale in a lot of different sectors. Maybe it's a good time to buy. I mean, I look at things like Bitcoin that was trading at $105,000 a share, and then I looked at it and it was in the mid-70s. I mean, that's a buying opportunity for some people if you're in the crypto side of things. Ethereum at one time was trading at like $6,000 a share, and it was like $1,700 or $1,800 a share. So there's been a real reset. And I know that people who are investors, whether it's real estate investing, stocks, bonds, whatever you're investing in, if you can bring some calmness to this and start looking at all of the different components that are out there, you're going to see the strengths. And Scott Bessent, the Treasury Secretary, has been talking about these lately. It's just don't let the emotion drive you, because there's a lot of opportunities to pick up real estate, and this confusion that'll probably be with us for the next quarter in some way, even though we'll see some stability starting to come, is going to make some opportunities for some people who are have-to sellers, people who have hoarder homes, people who are going into long-term care, people who have severe deferred maintenance, people who have to move and need cash offers in their houses right now. Some of these people are going to be more motivated because they've been listening to the news cycle. They've heard how bad the stock market is. They've heard how horrible these tariffs are. They've heard these things, and I think it's going to open up an additional cycle for us in the marketplace. And, we've had some people come to us and talk about, well, if we're going to be doing, if we're going into this cycle, what could we do on some joint ventures? I think there's going to be some opportunity for collaboration and some joint ventures on some bigger opportunities, as long as there's a little bit of turbulence with the market. And so real estate investors are no different. They're dazed and confused right now. They're thinking, well, is this a good time to buy, or should I just stop buying? But I think that's the wrong move. I think this is the opportunity to utilize what's going on in the economy, run your numbers, utilize those to leverage your acquisitions, because this is going to all come back. I fall back a lot on what the CFO of the National Association of Realtors said, and he said looking at the policies of this administration and looking at what happened last time those policies were implemented in the U.S. economy, that they're expecting that by fourth quarter of 2025, that the real estate market, the retail real estate market, is going to be strong, and it should carry all the way through 2026. So that means those who are taking advantage of their acquisitions now, when we can still acquire properties at a very good price per square foot, when we have some leverage for negotiating, we're going to be able to take advantage of when the market comes back. Because and remember, as investors, if we wait until everything gets good, now we've got this thing called competition. Competition is not good for us as investors. It's not good if you're a retail home buyer. The less competition you have, the more opportunities you have to negotiate the best deal that is available in the marketplace. But if you wait for competition to come around and bring others in who are also willing to negotiate for that same asset that you want to negotiate, what typically happens is you get less concessions, you get higher prices, you lose out on more deals. It takes more effort to get something under contract. And so I'm just saying, hey, stay calm. Let's refocus. Let's get out from being dazed and confused because of all this turbulence with tariffs and the stock market, the bond rate, and the interest rates. And I think that we'll be able to implement a strong investment strategy for the second half of this year as we finish out the second quarter strong and then move into the second half of the year. I think there's a lot of opportunities out there for investors who are not dazed and confused, but using sound techniques in order to accomplish what we need to accomplish for our business goals. Hey, I want to thank you for joining me on this episode of the Whitwam Wealth Real Estate Podcast. I invite you to subscribe today and be part of our growing community. Be sure to check out our growing list of previous episodes about other real estate investing topics. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcast, YouTube, or wherever you enjoy listening to podcasts. This is Scott Whitwam. Be sure to join me on my next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.